Tariffs of up to 100% on the biggest buyers of Russian crude. That Senate bill just moved from theory to a real timeline. By the end, you'll know the single currency most exposed to this bill, and exactly how traders are thinking about playing it. Soon placed a House-Ukraine bill on the calendar. It may become a shell for far tougher Graham-negotiated sanctions. It exempts France and Japan, but targets China and India directly. Those two shipped over $400 billion in goods to the US last year, so this won't stay contained to Moscow. It ripples straight into the FX majors and the highest-yielding emerging crosses. The whole trade runs through oil. Secondary sanctions shrink supply routes, and Brent and WTI could spike on uncertainty alone. Higher oil splits the market, energy exporters gain, importers bleed, a clean divide across the currency board. The most direct casualty is the ruble. But USD rub isn't tradable for most retail, so the real play is in the proxies. USD INR likely grinds higher. India leans on discounted Russian crude to manage its deficit. Remove it and the import bill swells. The RBI would push back, but reserve-burning intervention rarely reverses a fundamental trend. And the currency everyone's watching? That reveal is still coming. USD CNH is subtler. Beijing absorbs shocks with fiscal support and managed fixings, so expect episodic spikes, not a clean trend. Now the dollar tension. Escalation drives haaven demand, lifting DXY as capital floods into treasuries, but higher oil is inflationary, rates stay higher for longer. Dollar positive on differentials, growth negative over time. EUR USD becomes a two-sided battleground. The analysis leans mildly bearish on confirmed escalation, with haaven downdrafts the main risk. Winners, CAD and NOK, energy exporters, commodity equities. Losers, import-heavy EM, airlines and carry trades funded in low-yield currencies. But don't front-run Congress. Speaker Johnson called the bill poorly drafted, and Rand Paul openly opposes the tariffs. And the biggest reversal risk. If sanctions push Putin toward peace, the whole risk premium collapses and every trade inverts. So here's the reveal. The single cleanest expression? USD INR. The direct casualty India can't easily defend. The actionable read: build small on committee clearance, add on a floor vote, and keep dry powder for haaven spike reversals. But the caveat holds. A diluted vote or a ceasefire unwinds it fast, so size with defined risk. Petro-currencies and haaven dollars lead if the bill bites. Stay flexible, respect the two-sided dollar, and let oil do the talking. Read the full analysis on edge-forex.com. Link is in the description.